China set to lower lending benchmarks to revive wobbly economy. Shanghai, China is widely anticipated to lower its benchmark lending costs on Monday, a survey confirmed, with a large majority of contributors predicting a deeper cut to the loan reference to lift the sick belongings region and the overall financial system. The loan high charge (LPR), which banks commonly fee their nice clients, is ready by 18 targeted commercial banks who submit proposed charges to the People's Bank of China (PBOC). 25 out of 30 respondents in the Snap poll anticipated a 10 basis point reduction to the one-year LPR. All 30 members anticipated a reduce to the 5-year tenor, with 27, or 90% of them, forecasting a reduction larger than 10 bits per second. Among them, 15 buyers and analysts anticipated a 15 bits per second reduce, 10 forecast a 20 bits per second cut, and the closing tipped a 25 bits per second discount. Most new and excellent loans in China are based totally on the one-year LPR, which now stands at 3.70%, after a discount in January. The 5-year rate, which became closing lowered in May, affects the pricing of home mortgages and is now at 4.45%. The market consensus of LPR cuts this month comes as the PBOC earlier this week abruptly diminished 2 key hobby rates for the second time this year, to attempt to revive credit's demand in the COVID-hit economy. We suppose this will translate to extra transmission of easing into the actual economy, through potential LPR cuts subsequent week, mentioned Pekchin Liu, leader China economist at NatWest, because the LPR is now loosely pegged to the valuable bank's medium-term lending facility charge. We expect 5Y LPR to be decreased by 15 foundation factors (BPS), whilst 1Y LPR to be lowered through 10 bits per second, as banks step as much as guide the call for loans. The terrific dovish tilt in PBOC's economic policy stance got here after a slew of key gauges consisting of credit lending facts and pastime signs confirmed the economic system all at once slowed in July. The lack of increased momentum has raised the project dealing with policymakers amid mounting headwinds inclusive of a resurgence of local COVID-19 cases, inflationary pressures and a slowing global economic system. Policy insiders and analysts informed that the PBOC is about to take greater easing steps, even though it faces limited room to maneuver because of concerns over growing inflation and capital flight. After this small rate cut and probable resulting LPR reduce, the space for the PBOC to reduce costs could be pretty restrained because of a growing interest charge differential among China and the US and squeezed income margins for banks, stated Ting Liu, leader China economist at Nomura.